Good morning, folks. This is Naeem Azam, Chief Market Analyst at Evertrade, and welcome to our daily technical analysis video. In today's segment, we will be discussing Brent oil prices, and we'll be taking matters where we left off last time, which is day before yesterday. We covered Brent oil, and now we wanted to further build on that particular analysis. As always, before we do anything else, it is important for me to go through this disclaimer. Anything which we will be discussing in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, I am going to bring out the MT4 platform, and to begin with we will look at Brent oil prices on the daily time frame. Now, if you remember from our previous analysis, we were talking about oil prices going into a major resistance level. Now, that major resistance level was just right over here. We talked about the prices going into this particular gap from here to here, which I will show it to you guys just in a bit. But let me just adjust this level, this resistance level that we talked about in our previous analysis, and that was like between 61 to 60.33 approximately. Now clearly the prices have gone into that resistance zone quite high. So now what we could do is we can just slightly readjust that resistance zone a little bit more, meaning now we can move these resistance lines slightly higher, because obviously this was the gap initially we were targeting. Price clearly completed that gap without any problem, and it is still moving to the upside. But the most important trade that we've talked about is that price has gone too far too fast, and we haven't had a test of a 50-day simple moving average in a very long time, because it was in November last year when the prices kind of moved above the 50-day simple moving average, and ever since the price has been in this upward trend. We have tried to come close to 50-day simple moving average, but we haven't had a touch of a 50-day simple moving average. And as you can see, for the last number of days, meaning 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days, we have seen prices continuing their journey to the upside without any down day. But as of today, what we are doing that now is the opportunity is to place a stop loss on top of this particular candle, which is going to be 61.30, or you can equally place your stop loss above this particular price, which is 62.40 to 4, and really look for a short trade, because right now prices are trading at 60.90, and even if you put your stop losses just above the high of this candle, what we really want to target from here is price moving to the downside, price coming to its previous support level. And that previous support level, the immediate support level, is going to be where the previous resistance was, because remember this area was previous resistance. The price clearly broke above this resistance zone without any hesitation, without any problem, because this is a support area. And as you will probably know from my previous analysis, that we like to keep our support lines in green and our resistance line in red, so that when we look at the chart we can clearly see where the distinction is. So this is our first area of target, the first area where we wanted to get some profit in. However, if we go into our smaller time frame, such as 4-hour time frame, we can see that there is another support area, and that support area is just in around this particular consolidation zone. It is talking, we are talking about this particular consolidation zone. I'm going to draw the upper line of that one as well. So it's going to be between 58.30 to 58.68, because this is an intraday consolidation or support zone. So we like to change the intraday into blue on the chart in blue color so that we know when we look at it that which support zone is an intraday, meaning for traders who can stomach a little bit more risk, and which support zone is for traders who can stomach a little bit more risk, and that comes from the green line. So now again, if we go into our daily time frame, we know this is our major support zone, this is our intraday support zone, and this is our major resistance zone. Now clearly, once again, to summarize, what we're doing is we're putting our stop losses above the top of this candle, which is 61.30, or equally you can put your stop loss on above this resistance zone, which is 62.44, 62.44, and then you can really target this immediate support zone. Now in terms of risk to reward ratio, we are still very much okay because our risk right now in under the current circumstances is this much, but in terms of our reward, we are looking for this one. So we really have nearly 2 to 1 risk to reward, this being our reward, this being our risk. But we do know that our actual risk is actually, we can put our stop losses on top of this particular candle as I mentioned above, and then if the, let's say if we get stopped out, if the price continues to move higher, we can always take another trade. But for now, you can do both strategies, but in terms of a risk to reward ratio, the price does certainly make sense. And even this is our first support area, but if we look at our second support area, which is right over here, we know that we have more than 3 to 1 risk to reward ratio, pretty much 3 to 1 risk to reward ratio for this particular trade. So we will continue to monitor Brent oil prices as they have gone way overextended, meaning the price has gone too far too fast. This is our support, major support area, this is our major resistance area, and this is our intermediate support area where we may want to take some profit off the table. We will do a further analysis on this particular trade in the next few days as it will perform more price, as the price will continue to move forward from here. But for now, this is all, and I'll see you guys next time.